Hi, good morning, everybody. I'm Helen McDade with Falch Ireland's Enterprise Supports team, and you're all very welcome this morning to this webinar and all about simple metrics for making better business decisions. So look, just to cover off on a few of the logistics before we get started, I'd like to start by giving a very warm welcome to our two panelists today, Michael and Emma Jane. Now, Michael Williamson is an accountant, but Michael's also a bit of a gem in that he's an accountant, but he's also been an operations manager and a hotel GM. So he very much understands the frontline operations as well as the numbers end of things. And then Emma Jane's here today as our kind of industry expertise. And Emma Jane's the F&B manager at the Clandyboy Lodge Hotel just outside Belfast. And what Emma Jane's going to focus on are the very kind of practical applications of reporting available from the electronic point of sale system from a restaurant perspective, and really kind of how you can implement those in your business. So you're both very welcome. So just to go through the session this morning, it'll last probably about an hour and 15 minutes. Feel free to submit questions as you go. We had some questions at the start, so we kind of covered an awful lot of those in the presentations. And then the questions you submit, I can either ask those as we go, or I'll hold on to them at the Q&A at the end, kind of depending on what they are. And then finally, we're recording this session and it'll go up on the Falch Ireland Support Hub with a copy of the slide deck with all the links, etc. So you can have all of that, so you don't need to be frantically taking notes. So look, I guess for the logistics out of the way, we'll go ahead and get started. And you don't need me to tell you what a devastating year this has been for hospitality businesses. And really, since COVID hit, Falch Ireland, and in this case particularly the food tourism team, has been touching base with a lot of you to really see how we can best support you through this really, really difficult time. And the feedback from those sessions and that the insights we gathered and what's important to you and the issues that you're facing is really what has prompted this session and formed the content, particularly now as businesses are hopefully preparing to reopen again in December. And just in relation to that and to the insights, and thanks to everybody who completed the short questionnaire we had around the session, we have quite a kind of mixed group today. So kind of just to give you a sense of those results and really kind of see where we're coming from in terms of the content. When we asked, excuse me if I read these because we just kind of finalized them this morning. We asked of all the businesses, how often do you perform a financial review? Now, of the responses, we have 13% who do it weekly, we have 45% who do monthly reviews, and we have 42% who do annually reviews. And I'm sure Michael and Emma Jane will agree with me whenever we say, like, and even with the annually ones, there's probably a lot of hints and tips that you'll pick up today that you can kind of do that maybe on a more frequent basis. Looking at around the question about do you use metrics to inform business decisions, and 68% of respondents said no. So again, I think there's be a lot of information here that you can pull out, that you can look at your business, particularly as things are changing so much at the moment. Around whether financial reporting was included in management meetings, there was kind of a 50-50 split on that one. In terms of using your point of sale system currently for analysis, nearly 60% said no, that they haven't. And then in terms of using the point of sale systems for different revenue streams across the organization, there's kind of 95% of people don't use the point of sale systems for anything else other than kind of almost like a till function. So I think for all of you, you'll see we have a mixed group, but I think for a lot of you, this will kind of give you maybe a reminder of a lot of the things you know already, but maybe for some of you, it'll actually help you then look and see what information you could pull and data that you can analyze. It'll really help you with a lot of those tricky business decisions. Now, obviously, having a good handle on the finance of your business has always been important, but trading conditions are really uncertain at the minute, and with rolling restrictions and with quite a short lead time into a lot of these restrictions, etc., and it's making the financial aspects of the business really much more complicated and difficult, and particularly as many businesses are now focused on survival and really staying afloat in the short term. And then in addition to that, you've all had to kind of pivot your business and consider diversifying more rapidly than ever. And in that, you've shown like amazing resilience and creativity and innovation. And it's brilliant to see some of the things that kind of restaurants and pubs like yourselves are doing. And for many of you, these decisions have really helped you stay afloat and keep your brand out there. And in some cases, you've kind of created additional product offerings and successful revenue streams like meal in a box or takeaway or retail options that you would never have considered before. So one of the things Emma Jane and Michael are going to cover today are the practical tips on analysing to kind of see, do these additional revenue streams really make financial sense for your business as well? Now, one of the other things that the feedback highlighted is that many of you are reliant on your accountant and financial advisor to provide information on business performance. And probably that figure that over 40% of people only review their finances annually probably show that. But I guess what we want to do is try and help you and your accountant have really good discussions and analyse the detail and your accounts and financial reports, maybe in a wee bit more depth to kind of make those informed business decisions. And there might be kind of small tweaks and changes you can make in the data you can gather, but actually the insights that you get from that will make a big difference to you. And this is important from an operational perspective, but it's also important for your future planning. And that could be applying for a loan, or preparing for a conversation with the bank, or really considering whether you're going to keep those new revenue streams as part of the business in the longer term. And then in terms of the electronic point of sale systems, it's really about showing you how you can access a lot of that performance data yourself, and how a lot of these systems currently are being used for that transactional information, as we mentioned, but it can do an awful lot more to help you manage your business more effectively and track performance in real time. And that's the key, because it lets you adjust your business very quickly, particularly at the minute as things are changing so fast. So Emma Jane will talk you through some great examples of the type of information you can get, the insights it can give you, and in particular the types of decisions that she's made in her business and that on the information and what the impact of that have been. So if any of you who do use your point of sale systems to analyse, and if you have any good examples of things that you've done that you find really helpful, just pop them in the chat, because other examples like that would be really helpful too. So look at Michael, without further ado, I will hand over to you and you can take it from here, and then I'll pop back in with questions whenever it's needed.
Thank you very much, Helen, and good morning to everyone. I'm Michael Williamson. I have a number of topics that I want to talk through this morning. The first one, let me see now what's happened here. Okay, yeah, the first one being the nature of costs. This may well be familiar to a number of you attending the webinar today, but I think it's always worthwhile having a refresher, because in actual fact, I think how we treat costs sometimes is, we treat it in too simplified a version. I think there's some real opportunities for your businesses here in terms of better analysis, but we'll get on to that in a moment or two. Costs, as you know, generally tend to be described in one of two ways. They're either variable or they're fixed costs. And the reality is that very few costs are truly fixed. In fact, the accountant side of me coming out says, well, they tend to be stepped. They're fixed for a period of time, and then perhaps whatever business you're in, as revenues or productivity or whatever market we're in gets to a certain level, we need to add more fixed costs and to keep expanding as an organization. So while some are fixed, very few are truly fixed forevermore, and in fact they tend to have steps, and that's worth knowing in terms of, as your business, when we get back into what is normality, hopefully starts to grow again. The other side then tends to be variable costs, which we refer to, and that's fairly simple to understand. As sales volumes rise, our costs tend to go up. But the truth is, it isn't linear. In your industry in particular, depending on your particular sales mix and your cost of the products that you're using and so on, that yes, your cost will go up as sales volumes increase, but they may go up at different rates at different times. So it's worth just bearing that in mind, that whilst we simplify them into two categories, the reality is, they tend to be a little bit more complicated than that. Looking at your business then in its totality, unsurprisingly, your total costs are a combination of your fixed and your variable costs. And again, as your sales volumes increase, you expect to see that line, and that little kink in that line then denotes that if you're trading at a particular level, the reality is your fixed costs are likely to shift all of a sudden at one point and then stay static for another period of time. Moving on a bit further then, this is the really important point out of all of this, is that your cost per unit. As your sales volume increases, your total costs are going to increase, but your sales per unit actually starts to come down and continues to come down, the more successful you are in terms of your sale volume. And I suppose, why is that? Well, there are a number of reasons why that is. Firstly, as your volume increases, the chances are you've got more efficiencies in your business, whether that be in the kitchen or be in operations or whatever it happens to be. The more successful you are, you probably have better buying power, so you probably can negotiate better prices. But most of all, the more units you sell, those fixed costs that exist in your business, whether you're serving 10 customers or 100 customers, the cost is being spread over, I suppose, a broader pair of shoulders, the more volume you have, and therefore your cost per unit starts to fall quite materially. And it's really important to understand the nature of costs in their totality. If we look at that little sort of blue segment there, it's probably obvious to everybody that only when your revenue exceeds your total costs will your business actually generate a profit, and that is true. So it is for all types of business. So understanding your costs and how you can use those in better advising you on making decisions, we'll come on to in a minute, but understanding the nature of those costs is really quite important. Underpricing is going to damage your business and your reputation. So if you don't understand the cost of a product or service that you offer, how can you price it? How can you price it to be profitable? So you need to bear that in mind. Once your fixed costs are recovered, and we're going to focus on this in a few moments, your variable costs are really your only additional cost of sale. And so what then happens is you get to a point where effectively, once you meet that break even, in other words, you've met all your fixed cost, your profit for every sale then starts to increase quite materially. And that's something I want to focus on in another part of this session. And I think we get bound up in a number of key performance indicators that, whilst they're very important, I think sometimes they can do us a little bit of a disservice. So, for example, we tend to look at this industry through the prism sometimes of our gross profit margin, whether it's simply we're simply running a bar, for example, and we look at what our beverage costs are, and then that gives us our gross profit from beverage sales. Or for a restaurant, we tend to look at what our food costs are and our beverage costs are, and we have our food and beverage gross profit ratios. And I think we tend to get fixated on those. My view is we need to go a stage further than that. And what we need to really look at is what the contribution of each of those elements has given us. And that's the sales minus all of the variable costs. And then that gives a contribution towards our fixed costs. And to me, that's a much more meaningful metric. It will include the cost of sales for food and beverage, but it's a much more meaningful metric in terms of looking at how you're going to take your business forward. So we'll take a look at this from a very practical perspective. So we will now, and as part of your financial analysis of your business. Having good financial information is something that is actually fundamental to helping you making really important business decisions. And I think it's probably fair to say that, looking at your accounts only once a year, for example, if that's what you're doing, really denies you the opportunity of improving the performance through identifying what trends may be happening, whether there's opportunities to improve operating income, or whether also there are opportunities to drive other types of efficiencies in your business. And having decided then that you want, in fact, you need more regular information, you must identify what it is that you really want, because it may be that your accountant is going to provide it, or you have to provide information to them. And again, I'll touch on that again later on. But just to sort of give you a very practical example of this, if we look at what would be a fairly simple set of accounts. Now, this is the Fulcher restaurant, so it is. Other eateries are available, by the way. And this particular business in this example offers both a sit-in and a takeaway service. And here's a set of accounts for the 12 months to the 30th of June. And this would be a fairly standard set of accounts, probably prepared more for compliance reasons than business assessment reasons. And from that, what can we see from that? Well, look, its turnover was just under 1.435 million pounds, or euros, sorry. Its food cost of sales ratio was 32.4. its bar and wine, its beverage cost of sales ratio was 29.7. Our gross profit margin then, we almost €1 million in gross profit, so it was just a shade under 70%. Our payroll cost ratio was 39.8%, and our bottom line profit before tax was a shade under €100,000 or 6.9% of turnover. So fairly standard. You get a set of accounts, you won't usually get those KPIs down the side, but of course they're very easily calculated. So it tells me some key facts, but the reality are there are a number of limitations with that layout. So for example, I made the point that it offers both sit-in and take-away options. I've no idea what's going on in each of those other than my gut feel. We've talked about the limited number of KPIs there, so we don't know average spend. We don't know whether both activities are making money or not. If you want to measure, if you want to improve something, you have to be able to measure it. And that's very difficult with that layout because we just simply do not have enough information to allow us to make informed decisions rather than gut feel decisions. So therefore, your management and control of the business aren't really what they should be. And importantly, it's very difficult to see the impact of any changes you want to make to your business. So in overall terms, my view is, look, they may meet regulatory requirements, but in terms of running a business and in terms of making the decisions on that business, they're really not fit for purpose. And I suppose you also have to be mindful that in the current environment we're in, cash flow is probably maybe your overriding priority. Your P&L account isn't a representation of your cash flow, so that's something where you will clearly need help with your accountant to make sure that you're getting that sort of information on a regular basis. We're not talking about cash flow specifically today, but just to make the point, profit doesn't equal cash flow. So having made the point that I think we need to look at some different metrics in addition to those old standards, there are really some simple changes, and I do mean really simple changes that I think will completely change the complexion of what you get in terms of valuable information for you. So for instance, splitting out the fixed and variable costs will be really useful. It isn't always easy to necessarily identify the variable cost for one part of your activities or another, but you can apportion them on the basis of things like the relative turnovers or the relative number of covers, for example, and that's something again that is easily done and your accountant can help you with. You surely should have the number of covers and takeaway orders in this particular example on the face of any management information you get, because that will help drive some other statistics. Having that information will certainly help you to better forecast and set better sales targets within different elements of your business. And it will also help you if you're considering other types of revenue streams that you currently aren't offering, but you may be thinking of introducing. With some more of that information close at hand, you may be able to make better, more reasoned judgments on what you think is likely to happen. And really, that information is probably all at hand. You probably have that information, but you may not necessarily just be using it on a day-to-day basis. Now, taking that information and applying it to the same set of accounts that we just looked at, then completely transforms, in my opinion, what you're now presented with. So none of the numbers have changed. All we've done is introduce a split between fixed costs and variable costs, and we've introduced the number of covers and the number of takeaway meals. And so what does it tell us? Well, it now tells us that from the sit-in restaurant with a turnover of about €1.23 million, we're now making a contribution to our fixed costs of about €600,000 a year. From a takeaway revenues of about €204,000, this business is now making a contribution to its fixed costs of about €97,000 a year. The bottom line is still the same, pre-tax profit of €99,000 at 6.9%, but the little analysis in below that now starts to really, I think, is really quite revealing. So that tells us that our average spend per cover in the restaurant is €35.50. Our average takeaway order is €22.41. We can see our variable cost per different type of service there. Our contribution to fixed cost per sit-in cover is €16.65, and per takeaway order is €10.68. So, and all we did there was add really the number of covers and the number of takeaway meals and have some sort of split between our variable costs. And now all of a sudden, I think we have a much better picture of what's going on in that business. So I suppose the key takeaways from this, no pun intended, is that with a very limited amount of additional information, it completely changes, I think, your understanding of what your business is actually doing. Very importantly, I talked about that contribution to fixed costs. If you have a service or a product line that you offer that doesn't make a contribution to fixed costs, you shouldn't be doing it, because the more successful you are in selling it, actually the more loss you're making. So you must make a contribution to your fixed costs, and we can only see that from having done that analysis, that both those particular service lines are doing it. In that particular example, the restaurant guests are more profitable. We saw that, but a modest increase in covers or takeaway orders is probably even more profitable than that, because there really is unlikely to be any change in your payroll costs, for example, within fairly narrow parameters. It's now much easier to measure the impact of changes. So, for example, if you decided on your sit-in menu that you would increase all your prices by 50 cents with VAT on top, then that would increase your restaurant income by 15,000 euros. If you decided, for example, that you were going to set a target of variable payroll costs of 14%, then that would add 24,000 euros to your bottom line profit. So collectively, you'd have added 40,000 pounds to your bottom line, frankly, for free. And that would mean that your profitability ratio overall would be greater than 10% of your turnover rather than 7%. Very simple changes, nothing major in there, but all of a sudden you're driving something quite significant to your bottom line. And also using those basic principles allows us to look at the contribution break-even of any more services that you may be considering offering. And I'll come back to that point later on. Now, before I hand over to Emma Jane to talk about...
Actually, Michael, sorry,
yes?
It's Helen here. Just before you go on, sorry, we just have a question in there. What is meant by timely financial analysis? Every day, week, month, what's best practice?
I think for your KPIs, I would suggest you'd want to see your KPIs, whether that's your cost of sales ratio, your payroll cost of sales ratios, your average spend. I would be reviewing those daily if my system gives it to me that way. In terms of the more detailed set of accounts, I think you need to see those monthly.
Okay.
And if you can get them more frequently than that, great. But that's probably going to be cost prohibitive, certainly monthly.
Okay, grand. And then somebody else put in a question here. Is there a way to automate filling figures into the P&L to reduce the amount of time spent on it? And I see my colleague Marion, she's put a link up there to some of the templates we have on the website. So that'll probably answer that one. So, okay, thank you.
Okay, well, just to round out that point, Helen, it may well be that whatever EPoS system you're using may actually link into the software that is being utilized to produce accounts. So it may be possible, but obviously not knowing the individual systems that are being used, I can't say for certain, but certainly there's an awful lot of integration now of the various systems as they become much more sophisticated. So there probably is a solution is the short answer.
Yeah, and so really what they need to do with that then is to talk to their service provider for their EPoS system, because that's
absolutely right. Yes. I mean, it isn't unusual to find some of those off-the-shelf packages linking into things like Excel spreadsheets or into Sage or whatever's being used, sort of back of house to run accounts and whatever.
Okay, brilliant. Thanks, Michael.
Okay, just then to move on then, before I hand over to Emma Jane to talk about EPoS systems, there are a few other KPIs in the industry that I haven't touched on, but again, that probably your EPoS system will pump out, but also that are going to be very useful to you. So for example, your table turnover ratio, why is that useful? Well, really it's an effective measure of you managing your capacity within your premises. And again, that's something that if you're trying to drive up the number of covers, that should shake out of that. Sales per floor staff member or per floor staff employee, why is that important? Because it's a measure of staff efficiency and it's also a measure of their upselling skills. So again, that's one that I would recommend that you should really be looking at. and a menu item sales analysis. I know Emma Jane will talk about this in a bit more detail, but again, and I know some of you are already doing this, really important to focus on those dishes or menu items that you offer that are selling really well, and those that aren't, you should get rid of them and change them to something else that probably offers you a much better margin. So at this point, I'm going to hand over to Emma Jane. I just have to slip sideways here and let Emma Jane exit stage right, as it were, and I'll speak to you again in a few minutes.
We all gotta love social distancing.
Thanks, Michael. Morning, everyone. Sorry. So EPoS and how you can make it work for you. We have been using EPoS in our establishment in the brasserie for 10 plus years, but in the last 2 years we've introduced handheld systems which have changed our business completely. So they're in the form of either an iPad or a tablet, and they can be integrated into your systems. But what I kind of wanted to talk to you about this morning was, on the screen there are some examples of how EPoS can make your business better and streamline so that you can have more profitability, but also efficiency, which in turn makes a bit more money. So the EPoS system is useful for a number of people in our business. If we were still using it just solely as a traditional till system for adding up bills and cashing off, it really would only have any benefit to front of house. But because we try and utilize it as much as we can, it's useful for me as the manager, but also for our managing director, our accountants, and also our chefs get a lot of benefit from it as well. So if we kick off with efficiency and going back to the handhelds, and in this COVID environment that we're in, we've had to expand our seating outdoors into a heated terrace. The handheld machines are great because you can input the drink order, it fires back to the bar, and before you've even walked to the bar to get it, it's there and it's ready for your customer to be served. There are lots and lots of reports that you can pull from these systems. And yes, we do use a lot of them, but there's hundreds that I don't even look at. The most effective ones for me are for your staff rostering, but also for your sales analysis. So when I look at the day-to-day reports and see in the morning between sort of 10 and 12, it's very busy for coffee, morning scones, that sort of thing, I know that my rotas for the week, next week, I need to adjust accordingly or reduce if the money isn't coming in at that time. But also the next few slides that I'm going to show you will show sales analysis for some of my team as well, and how you can pull from that. The best one that I think is probably how you can put all the information into the system when you get your invoices in from your supplier. You're able to process all of that information into the EPoS, and then you get a countdown of your sales. So on a busy Saturday night, when you've got 3 different people running the food service, it will flag up to them that they only have 10 chicken left to sell. And it's communication like that that cuts out all of the disappointment. You know yourself, if you've ordered something and excuse me, the staff member comes back and says it's actually gone, and it's sort of a 5-minute lag time. It's not the great customer service that you're wanting to provide for your customer. The other thing is ease of use for EPoS and for your servers. Everything's there, you just need to press the button. And with allergens being so prevalent in our industry now, they're great because they're all pre-programmed. But if we move on to our first slide, then this is sales by employee. This is a great slide for monitoring staff and helping to see where the holes are in your training. So this is for August, a period in August. What you might be able to get from this is if you had 4 staff members on duty that day, obviously you wouldn't take it day to day, you would take it month to month and see, is potentially Becky not selling as many drinks as Andrea? Is that down to her confidence in cocktails or her confidence in wine? Is that maybe some in-house training that needs to be looked at again? And the upselling of, you know, why is Andrea doing it so well? great that she is, but what can we pass on to the other team members for that? Next slide then is beverage. So this is called the top 25. You can do it top 10, top 25, whatever you wish. Now this was a great slide, or a great sales report for me. This was in August, and obviously we had the help out to eat out, which was great for the industry. But it showed me a different trend of what we were actually selling. So if you look right at the bottom of the page, Gordon's hasn't shown in my top 25 for, I would say, at least a year and a half. And I find I think that's because we're not getting as many sales customers, customers coming in. It's more local. So in that respect, they're not looking for small batch gins. They're looking for the house gin. It's a little bit less expensive, but also they've tried Jawbox, they've tried Gordon's. They know what they like, and they're going back to the traditional. But with that in mind, I then looked at it and said, well, Gordon's is our house gin. Why don't we put 10, 15 pence on each measure that we're selling? Because they're not looking at the price of it, they're just going back to the old trend. And that in itself will increase your profitability every month. We do look at these figures every month and go by our sales analysis. If we can put an extra 5, 10p on things every 4 weeks to 6 weeks, then the only thing you're going to do is increase your profit margins. This also is a good indicator for your stock levels. If you have, say, a trendy vodka that's been brought in by your supplier, but it's actually been sitting on your shelf for a year and you haven't really sold very much of it, you could always incorporate that into a seasonal cocktail. It gets the product moving, but it also gets you off your shelf, more room for something else that might actually sell. And then we have food. So food is one of the ones that we look at very regularly. And as you can see, our classic burger is probably one of our biggest sellers. Now we revise our menu sort of every 4 to 6 weeks. We would look at these sales patterns and say, right, what's selling, what's not selling. And with the classic burger in the last year, we've been able to put small increments every 4 to 6 weeks on that, just 10 to 15 pence each time. And we're seeing no resistance from our customers. We're continuously selling more and more of these fast moving products. We make great profit margins on these as well. And we're able to put the recipes into the system so that the chef knows how much cost is coming for each item, and we can see what our profitability is. Then as you go down the page, obviously it only gives you top 25, but you'll have the ones that are lagging right at the back, and that means that we will just take those off the menu, or we'll look, is the price structure right for those? It also means you can go year to year. So for July this year, we looked at July last year, we saw which dishes were on the menus, but we also saw which ones were good movers and which weren't. There's no point in reintroducing ones that didn't sell the year before or didn't have great profit margins on them. So it's great to get your menus moving, but also it shows you the tools that you can use to increase the profit margins on those. And we really don't get any resistance on the sort of 10, 15 pence every 68 weeks. So it's a great tool for us, guys. There's hundreds of reports there and you can use them as much as you wish. And if there's any other questions about anything that I've left out, please fire ahead. I'm going to hand back to Michael now for you. Thanks, guys.
Actually, Emma Jane, before you go, sorry. Okay, one quick question that has come in, and then I have a question myself. Where do I find out more about the reporting function for my EPoS system?
So it really depends on which EPoS system you're using. This is all back of house, so it'll be on a PC. And what you need to do is just speak to your EPoS provider. When we go into the back of house system, which is on a PC, it's a mirror image of your till, but then you also have the back of house management use. So you can go in and your EPoS provider will be able to create any report that you wish. I have specific ones tailored just to my brasserie that he's never implemented anywhere else, but it's just because of what I look at. So sales pattern per hour, let's say. But that's just for me, solely for rostering. You need to just go back to your EPoS provider and ask them where the reporting is in your EPoS system. It will be there, the functionality has to be there. And like I said, there are hundreds and hundreds of reports that you can run.
Okay, so I guess it's figuring out really, because they'll probably have some standard ones that work for most businesses, and then if you're only starting doing this, then you can kind of tweak them and change them. That'll kind of suit your business for what you want to know.
Absolutely. You can have, you know, they will all have the standard ones of sales per category, sales per day, top 10, top 25. They'll break them down into very generic ones, and then your EPoS provider, well, ours certainly does, they can write reports that you want specifically for specific things.
Right. And actually, I'm just thinking back to the question that was on the survey about including the financial reporting and management meetings. Do you use these reports and they kind of share these with your staff and discuss them generally, or how do you kind of just use them from a management perspective?
For management wise, we would use them on a fortnightly basis. So myself and the MD would sit down and look at what we're doing and where we're going. But I would also use them as a staff boost. So over the December period last year, we were able to print off how many of the Christmas cocktail was sold and use that as an upselling. So at the end of the Christmas period, from the 1st to the 23rd, we then printed off the reports, and it literally was just my staff's names on one side and how many of the Grinch they had sold, and whoever sold the most over the December period got a nice bottle of wine and a box of chocolates. But it made them get out and actually sell the product, because it was a funky thing to sell. They were all, and who doesn't want a free bottle of wine?
Fair enough. All right, thanks, Emma-Jane.
Okay, thank you.
Thanks for that, Emma-Jane. I noticed you didn't give the winner a cocktail, but anyway, let's say about that the better, maybe. Okay, then moving on, we talked earlier on and we looked at a very practical example of maybe better utilization of the information you have, and that's really what Emma-Jane's been talking about. You probably have a lot of this information available to you already, but it's maybe not just being used in a way that helps in your decision making. One of the things we looked at the front end of this was, you know, a different way of assessing business performance. And indeed, if you're going to introduce new revenue options, then you know, you need to sort of get yourself ready for that. And there is a tool available. You'll see a little link at the bottom of this slide on the Fulcher Ireland website. In fact, there's a number of tools that they're called capacity and commercial impact calculators, and they help you make decisions about reopening or introducing new services. And one of a number of tools, in fact, are being made available by Fulcher Ireland. And I'm going to sort of give you a demonstration of that in a few seconds or so. And really what the calculators do, they estimate whether or not you're going to generate a surplus to help cover your fixed costs. What, in terms of the new service option in it, or the new product option in it, what the break-even sales value needs to be if it looks as though you're going to incur a loss. So, you know, if you're close or it tells you you're going to need to sell another 300 euros a week, well, you can make a decision on whether you think that's achievable or not. And if you're going to have some sort of upfront expenditure, in many cases you won't, but you may well have, then it will also give you an indicator as to how long it's going to take you to recover those costs, because of course that's important to you as well. So what I'm going to, I suppose, as Mark Twain said, the secret of getting ahead is getting started, and essentially what Fulcher Ireland are doing with these tools is allowing you to do exactly that. So I'm just going to flick over now to this calculator, and I'll run you through how it works. Okay, so this is, although it's called Restaurant Capacity Calculator, it's actually restaurant bars and cafe bars on the website, and there's a number of tabs at the bottom here. I'm really only going to concentrate on two of them. There's a standard calculator and a detailed calculator. I'll come to the standard calculator in a moment or two. Then there's a series of options, and these are intended to allow you to assess whether or not introducing some new type of product or service is actually going to be commercially viable for you. And it really works away. It requires a limited amount of information, or as little information as I can get away with, getting you to enter, and it's really driven by a whole series of formulas and behind that. And anything that you see in a sort of a pink box, you can edit, you can change that, you can word it whatever way you want. So in this particular case, if you're not, for instance, offering a takeaway service and you're considering doing so, then what you need to do here is enter the price, what you think the sales price is going to be net of VAT for a food order or per customer, and the same for beverage. What your expected ratios are going to be, so your food cost of sales, your bev cost of sales, and you only enter in incremental costs in here. So your current business costs are what they are, so it's this new service. How much more is it going to cost me to offer this new service? So in this case, if for example you thought, well, staff are going to be 20% of turnover, or alternatively you can put a value in down here rather than a percentage. If you know that it's going to be a set amount each day, for instance, do that. Any other variable costs you might have, for example, packaging might be one, and any other cost of opening your business. Maybe you're offering the takeaway service outside of your normal service hours, and therefore you're going to incur utilities costs and so on. So you can, again, anywhere you see a yellow box here, you can either put it in as a percentage or an absolute amount. Over here, if you're going to have any startup costs, you can name them and put the amount in. And then all you simply have to do is, in this case, take away, put in, this is week 1. So for example, we're looking at December 20 here. So week 1, put in the number of covers or the number of sales on the food side and on the beverage side by day. And I chose to put other costs in as an absolute amount rather than a percentage. And this little box down below then, put that in for week 1, shows you a summary of all of those calculations. And what this is telling us is, in this particular example, well, our expected turnover for the week net of VAT is €1,500. There's our cost of sales, our gross profits €1,033, and there's our other variable costs of doing business. And in this particular instance, it looks like we might lose, incur a loss of €73. Now, this box tells you, well, if you're making a loss, what would your additional sales need to be to actually break even? And in this case, it's suggesting it would need to be €477. Now, if I increase my price, that number is going to change. But in this, on the conditions that we put into it, it's telling us that we need €477 extra to break even. And I suppose if we weren't confident of doing that in week 2, 3, 4, and 5, then at this point you would say, well, you're incurring a loss, you're making no contribution to the fixed cost of the business, don't do it. Now, but look, we're starting out, so it's going to take a few weeks to bed in. So week 2 draws all that same information across that you've already entered in week 1, but you can change it if you wish. What you then have to enter again then is the number of covers or the number of takeaway meals and beverages you think you're going to sell. Maybe your other costs are going to go up a little bit that week as well. In this case then, it's suggesting that we're going to have a turnover of 5,300 and a profit of €945 in this particular week. And we've breached a break-even point, so that's 0, that's great. And now what it's telling us is we're making money. So how many weeks is it going to take me on the basis of this level of trading to actually recover all of my startup costs, which were €5,000? So we go to week 3 then, because we're still in a build-up phase, and the same sort of information again, a few more covers this week, a little bit more cost. Our turnover is now €8,000. We're now making €1,700 in week 3, hopefully, and we only now need another 2.13 weeks to recover all of our fixed costs. And once we've done that, then that profit starts spilling in to help recover the other fixed costs of the business. And there's week 4, for example, a little bit more uplift, €6,500. 2,245 of profit in theory. We've now covered all of our fixed costs. So we're now clear into profit. And the purpose of this little tool is that it's trying to help you make predictions about any new product or service that you're going to offer, whether it makes sense to do. So if it's telling you that you're going to incur a loss and you don't think you can make up that shortfall by increased customer throughput or by adjusting your prices or reducing your costs, then you shouldn't be doing it. There's no point finding out when you get your accounts a year later or 6 months later that in fact you're worse off than you were, and yet you went to all this effort to do that. So handy tool, it's a guide, it's not, you know, it's not going to hit the bullseye, but it doesn't need to hit the bullseye. All it needs to do is allow you to make a decision, an informed decision about what you're going to do with your business. Now, we also have here a standard calculator, and this is really looking at your business as it currently stands. Just on that option point, you've got 3 different opportunities there. So if you're thinking of introducing 3 different types of new service, you could test them all side by side and see which one works best for you. Now, this standard calculator is intended then for businesses about to be reopen, and this is really all built around your current offer. And you have a number of options here in terms of populating this. It's all in there's a video and guidance notes to accompany these particular calculators, so all downloadable from the Full Charlton website. And Helen will talk about that later on. But in this case, again, December, so we're looking at December here, there's a little drop down menu. We can decide what month we're looking at. In this case, it's December. Last year, these were our sales. So you heard Emma Jane talking a few moments ago about the fact that you know, they look at what they did on a particular month last year. I think Emma Jane mentioned Christmas last year and what they were doing and what products were selling and so on. So you can populate this particular model with your results from last year, and it will look at the percentages, and it will either use those or you can put new information in. And where you don't put that information in, the model will automatically look for last year. So in this case, we've decided, look, we're going to have our average spend is going to be higher this year, so we're going to use that instead of last year's average. We're going to use this weekly fixed payroll cost because it's different to what it was last year, so I'm going to use this in preference. And equally, again, down these cells, you can enter whatever data you want. It will pick these up. And you simply then, all you now need to do is 2 other things. If you're a restaurant, you need to put the number of covers, and in this case, it's only sit-in. You need to put the number of covers in each week by day. Or if you're a bar and you don't serve food, then in this section here, you put in what your expected sales are per day net of VAT, simply because you generally aren't counting the number of covers in a pub environment. It's very difficult to do that. So whatever your expected sales are on a day-by-day basis. In this particular example, we have both a restaurant and a separate bar area. So those restaurant customers will also take beverage, of course. And what we end up here, again, is in this highlighted area, the summary results. So this is given us a picture by day and a total over here for the full week. And in this particular, and you can see here, it looks as though we're going to lose money on Tuesday and Monday. Well, okay, that's probably not unusual. But in the overall picture is, there's our total sales split out by the different activities that we offer. There's our cost of sales, our gross profit. There's our variable payroll costs, our other variable cost of sales, and these are fixed operating costs. And we're showing here in this particular example, on a turnover of 22,000 euros, a profit of just a shade under 5,000 in this particular example. What it will also do is, if you offer sit-in, a separate bar, and or takeaway, it will then actually analyze the different activities and show you whether or not each of those is making a profit individually. This area is a collective of everything. This is a split by the different types of service or product that you offer. So for putting really limited information into the model, it is actually driving quite a lot of data for you that would be difficult to sit down and calculate on a day-to-day basis. This does it for you. And you know, again, it's only an indicator. Should I open in December or should I not? Should I open in January or should I not? And that's what it's trying to do, help you make those informed decisions. Here's week 2. Again, it pulls over this information automatically, but you can override it if you choose to. And so, in very simple terms, if none of this information up here was going to change, all you need to do is enter in your expected number of covers in the restaurant or your expected take in the bar, and once again, it's actually going to give you an indication of how you're going to perform that week. And this particular calculator will allow you to do that for 4 weeks in any given month. So it will. And if you scroll across here, you then get a sort of a summary of a summary, as it were, for 4 weeks, and it will upscale it for the full month. So it'll just essentially prorate the results, in that case for 28 days, and pull it up to 31. And And there's another little tab here it's just worth looking at. There's an overall summary which pulls any new services that you're offering, looks at those measures against your current outputs, but it also lets you enter in details for last year. So you can see now what you expect in terms of your turnover and your profitability in December 20 or January 21 or whenever it is. If you put last year's results in, it'll give you a little breakdown here of the change upwards or downwards and the change in percentage terms. So that tool is available there, it's downloadable, you save it under a different name, you populate it with the information, you use it when you want to, you don't have to use it all the time. But again, it's using those basic principles that we talked about earlier on in terms of helping you to make informed decisions about your business. Now, at this point, I have one other topic that I want to talk about, which is really working with your accountant, which for many of you will be really important. So we need now to go back to the new slides, the additional slides.
I think you're there now, Michael. If you just click
Am I there now? So if I click on this,
no, you should have control.
Oh, there we are. Okay, good stuff. All right. Sorry about that slight delay, folks. Okay, so probably the most important man you know, your accountant. And in terms of working with them, I just want to sort of give you some hints and tips. You're probably already doing it in many cases, but again, it's worth just sort of reiterating. I think you do, if you're not getting your accounts configured the way we looked at earlier on, I do think you need to do that almost as a matter of priority, because it is really important in terms of helping you make decisions about your business. The point was made earlier on about how frequently should you get your accounts. My view is ideally a full set of accounts, you should get them monthly. Now, for those that aren't doing it that way, there will be an added cost to that, and you need to balance up that cost with the value. I would nearly suggest to you nearly can't afford not to do it, but of course you need to button that out with your accountant. And in terms of changing the layout of your accounts, you will need to provide your accountant with certain information. So what's the best way of doing that? And you need to agree the dates. In other words, the sooner you get the information, the better that information, or the more valuable that information is to you in terms of making decisions about your business. So if you agree that your accountant's going to do some more for you or change the layout of the accounts, agree when you're going to get them, but equally you have to furnish that information to your accountant as quickly as you possibly can. If you're trading a loss currently, well, you can use that little model as an idea, but probably better to have that conversation with your accountant in terms of, look, how much do we need to improve to break even or to make a profit? It's important, as we've said, to understand the cost and the impact of any financial support that you may be getting. So there are a number of interventions there from government, and Helen's going to talk about those at the end. But if you're not already doing so, have that conversation with your accountant. Any new service ideas you have, you can use that calculator. We've showed you very simply how it works. Also have conversations about cost reductions, including fixed costs. They might be fixed today, but they might not be fixed tomorrow. And an example of that is you've probably seen this move away in the retail sector, particularly about fixed rents to revenue-based rents. And I think that's going to be a permanent feature going forward. And if you're in a position where you're renting premises, maybe that's a conversation that you need to have with your landlord and with your accountant, because it's really it's an awful burden on a business where it's having to pay a rent every month for a facility where it's not generating an income, or income's likely to be much lower for the foreseeable future than it had been prior to COVID-19. Equally, the impact, have a conversation with your accountant about the impact of moderate price increases on your income. The calculator will help you do that. Having a conversation with your accountant on that particular subject won't do any harm either. We've heard from Emma Jane that they have an approach which is incremental increases rather than an increase once a year. It doesn't seem to get no resistance. They have a very a very sound body of regular customers in that business. They don't seem to mind, and many of you will be in exactly the same boat. If you're not doing it, you need to be asking yourself the question, why am I not doing it? And then finally, are the government supports that are being made available to you or are available out there, are they being maximised? The simple fact of the matter is, government want to protect the industry, and you need to make sure that you're getting your fair share of that support. So on that particular topic, I will now pass over to Helen McDade. Thank you for listening, and I wish you well.
Okay, that's brilliant, Michael. Thanks a million. Now, a few questions have come in, but I think I'll actually keep them to the end. They might make more sense actually when you and Emma Jane are together to go through them. So, okay, so I'm going to spend the next 5 minutes or so just doing a very quick overview of the kind of the main government supports that are applicable to yourself. So the first one and the most recent one is the CRSS, the CRIS, as it's affectionately known. So this is the COVID restrictions response scheme, and this was announced as part of Budget 2021. So there's kind of two different kind of steps to this, like, is businesses have to register and then they have to claim. So the registration opened probably about 2 weeks ago now, maybe a week and a half, 2 weeks, and the claims actually opened on Tuesday. So if any of you have registered already, make sure that you can actually go in now and do your claim. We're actually doing a webinar on this tomorrow morning with Revenue at 11 o'clock. So if you haven't registered or you want to come, Marian's going to actually put up the link into the chat box now, and you can click through and register there. But what I'd say about the CRIS scheme is the three kind of main contexts that it's set on, and it's probably a lot more straightforward for pubs and restaurants, because there's always a lot of discussion specifically about the restrictions for those. For a lot of tourism businesses, it's a little more tricky. But I guess to bear in mind, it is linked directly to the Living with COVID plan. So that is the 5-level plan that the government used to kind of, as we move up and down various restrictions. Doesn't take into considerations any previous closures, nothing that. It's live as of October 17th, I believe is the first claim date. And if you kind of think of it in that context, it's also tied to a business premise and restriction of customers going into that business. And then the third is around tax status, but that's primarily around businesses who have charitable status or have sports exemption tax status, which doesn't really apply to this group so much. So they have put up their guidelines. We have linked them on the government support page on our site, which I'll show you in a second. And in fairness, the guidelines are actually quite comprehensive, and they have loads of different examples in there. So it's good to kind of have a good read through that. And as Michael said, make sure that you're really kind of taking advantage of all of these schemes. Now, the employee wage support scheme, that came in, I think it was August time now, that came in, and that was a replacement for the TWSS scheme. So I'd say most of you are well in tune with this at the minute. If you're not, definitely talk to your accountant about making sure that you're using the scheme to the best of your advantage. And this is where the government will subvent or will support the wages of staff. And it is all about that, keeping businesses open and keeping that link between employees and staff. Now, in terms of, that was originally to March next year. That has now been extended, that it'll be run through, they haven't given an end date, but it'll be extended beyond March. And again, that is, the purpose of that is to kind of give business confidence as they go on. So I would imagine it might be changed mid next year. I'd say it would very much depend on what's happening with the COVID restrictions. The commercial rate waiver is in place for all of you. That's currently up to the end of 2020. I haven't heard any conversations yet about beyond that, but that may be another option for next year. The tax liability warehousing, this is one a lot of businesses aren't familiar with, and it's actually a really good one to help protect cash flow, and that's really what it's put in there for. You will contact Revenue just to discuss it specifically, but really the crux of what it is rather than you having to pay a revenue bill this year, you can warehouse that debt through to next year, and it doesn't affect your tax clearance status or anything like that. That's all still fine. The VAT reduction obviously came into effect there on the 1st of November, and that's going to last through to the end of next year. And then there's COVID-19 loan schemes as well. And now I know a lot of you are sitting there thinking, is she mad? I don't want to take on any additional debt. And that's absolutely right for a lot of businesses. But what I will say is a lot of businesses depend on overdraft facilities to kind of get them through, even on a normal year, through the kind of January, February, March, and that's quite an expensive way to do it. But there's a lot of kind of like the COVID back schemes that have much lower interest rates. So just to be aware of those different options, and so you know what is available to you. And there's lots of other ones too, but I just picked out the main ones there. So look, with that, I think we'll go to Q&A. Just let me check here. I see notifications in just to make sure that I'm not talking to myself here and I'm actually off mute. So Michael and Emma, if you could switch your mics back on. What we'll do is I'll go through a few of the questions that have come in, and I'll start with this one. Not sure if this is best for you or you, Emma. It could be both of you. It's how do I choose the best EPoS system and where do I buy it? I love the way you both laugh.
I'll let Emma give you, I suppose, Emma's experiences of it. I think what you need to do is there's a number of providers out there, and you probably need to contact a number of them, or better still, talk to organizations that maybe that you're aware of who have installed systems recently, because like everything else, there's always going to be the good, the bad, and the ugly with any system. And find out which ones are working, and importantly, the level of support you get, because when you buy a system, you tend to buy a certain amount of training at the front end and the basics to get you up and running. But if you need ongoing support, you're going to have to pay for that. And sometimes some of the systems fall down on that front. So my view would be that you certainly, a bit of a beauty period, if I had to put a terminology on it, is you select a couple of systems that are out there, and maybe you know someone's using them, and you get them to come and do a presentation to you, or you do it online, obviously in the current climate, and you find out what they can offer. And as Emma Jane has said, they'll nearly tell you what side you comb your hair on, and you're paying for that. If you're going to pay for it, use it. But certainly do an assessment of a couple of systems, and I wouldn't advise just picking one unless you have some experience of the organization already and you're upgrading and running with it. They'll probably all do more or less the same. It's maybe the way in which they do it. It might be a little bit different, and how they integrate with maybe some of your back of house systems, whether that be if you're running Sage accounting, for example, or you're using Excel spreadsheets for financial information. Emma, I sort of hogged it there, but you may have a view.
We actually changed our EPoS provider in the last year. And the way that we looked at it was we had 3 different companies that people around us, other businesses around us, came and actually sold themselves to us. But then we were able to chat to other hotels or brasseries that had the EPoS in place and actually go to talk to the people that are on the ground and say, what is it that you love about this, or what is it you don't like about it? And then all the heads of department from the business all sat in a room and fought it out for which one thought was best. So I would say go to your competitors. I mean, they are your competitors, but we're all out there to help each other, especially in this day and age. And take those relevant people, your food and bev manager or your accountant, MD. We all went. There was 12 of us pulled up at all the hotels that we ventured with, and we were taken to all the relevant departments and shown everything. And that was really the way that we chose the EPoS system we're using now.
Okay, great.
Sounds like a bit of an invasion, Emma Jane.
We're all social distanced. So then I'm just thinking then for businesses that are on that maybe have an EPoS system but aren't using it to the name of their or to its full effectiveness currently, would they just then call their service provider and just kind of say, look, we need to set up better reporting systems here? Okay.
Certainly, right. Helen, I would be getting in touch with my EPoS support team and saying, off the back of this, we'd really like to have some communication with you on what we can pull from the system, what we're not actually using and utilizing at the moment. And there'll be somebody there that will be able to give them as much support as they need. And, they're probably paying for it and not using it. So, yeah, definitely get in touch.
Okay, and then obviously we can't put the name of one provider over another, but actually we've had 2 questions in now. What's the name of your provider, Emma Jane, if you wouldn't mind sharing it? And obviously we're in no way endorsing anything, but sorry.
Am I allowed to say it, or?
Yeah, as long as we're not endorsed it, but yes, absolutely.
Well, the programs that we use are HotSoft and Volante. HotSoft is bedroom related, but also does a lot of the caching, the cache side of things. But Volante is the system that we're using for our EPoS, and they have been great, but there are other providers out there. Yeah, I mean, and the support system that we're getting from those are great, and the integration for the handhelds has really increased productivity for us.
So it's kind of really understanding what the needs are for your business, and then which provider is going to best service your needs, because every business is a wee bit different. Okay, Michael, this is probably one from you. Do I have to include the amounts received from the government supports in the P&L and forecasts?
You could enter it. There's usually another income line in there, so you could enter it in there if you wanted to. I would be inclined probably not to, on the basis that you know, if you're trading at a loss in any given week, or you think you're going to trade a loss any week, I would concentrate on what I can do to address that loss or reduce that loss. The government support will come in anyway and will be helpful. But I think there's a risk if you put it in, it might make the thing look as though you're making a profit during the week with that government support. Whereas if you strip that out, the reality is you might not be making a profit, and therefore I would suggest that maybe you're best focusing your attention on what can I do to mitigate that loss, because the government support will come in anyway.
Okay, right. This one, you probably touched on it a bit, but my capacity is reduced due to restrictions, so I don't know if it makes sense to reopen for the Christmas period.
Yeah, well, in fact, that's what the calculator is exactly there for, is you know, why not download the calculator, spend maybe an hour, 2 hours, populating it with the number of covers that you think you're going to get. If it looks as though you're going to have a shortfall, then, you know, do you think you can do enough to eradicate that shortfall and turn it into profit? And if in your heart of hearts you think you can't, then I think that tool reaffirms maybe what your thoughts are. But equally, it may surprise you that maybe it should be suggested maybe you should open. But that's exactly what it's there for, to help you make a better informed decision rather than necessarily just gut feel. And that's not to say your gut feel isn't right, but sometimes it's nice to get affirmation from a tool that's freely available through the Falch Ireland website.
Yeah, and that's a good point, actually, because I know a lot of the other businesses we've worked with, and one of the things we're working with them on, it's around scenario planning. Because it's so difficult to plan at the minute, it's almost like you kind of do what you think you're going to do, and then do your best case scenario and your worst case scenario. And it was funny because a couple of the business even come back and said, having worked out their worst case scenario, it almost kind of give them ease to kind of like, well, okay, now I know, it's kind of like the bogeyman. Now I know what it is.
Yes.
Then I can work around it. So it's back to that, making the informed decision. Okay.
I think as well, Helen, just in that, sorry to cut across you, just in that particular calculator there, you know, you do have the 3 options.
Yes, okay, yeah.
Bottom, so you could actually use it rather than maybe the standard calculator if you wanted to do, this is what I think it'll do, but here's an upside and here's a downside.
Oh, I see.
So
yeah, okay. Yeah, that's a good idea.
Those 3 options in there for that purpose.
Okay, brilliant. This is probably one for both of you, probably you, Michael, from an accountancy perspective, and Emma Jane, you from an ops perspective. What are the essential KPIs I need to look at?
Okay, well, look, I don't know whether it's a restaurant or a bar or both. I think the essential KPIs...
It actually doesn't say, so sorry.
Okay, well, look, I think we can flush it anyway. The old standard is cost of sales, and that's there. But as I've said, I think about 20 minutes or so ago, I think we need to go beyond that. So I think you need to look at the contribution percentage as another KPI. The number, if you're not doing bar sales only, the number of covers, your average spend, your variable cost per meal, which is all in this presentation of how you get to that, and then probably also things if you're providing food. Table turnover or seat turnover, and your sales per floor staff member as well. Because again, if, as Emma Jane has said, if you're getting fairly significant variations around that, it tends to suggest that some staff are more efficient than others. And whilst it may not give you the answer, it sort of starts giving you the materials now to go and start asking the question, why is that? Why is Michael not great at upselling beverages, whereas Emma Jane is? Is it training? Okay. Is it a lack of confidence or whatever? So I think those are the sort of the touch points, and they're all the ones that are listed in there.
Okay, brilliant. And Emma Jane, anything from you from an ops side?
Michael pretty much covered it all. We're
okay, great.
Floor manager, we're just constantly looking at our variable costs and trying to reduce them. You know, with payroll and and using the reports to see what did we take on last week that we weren't projecting for that week, and moving ahead with your rostering and making sure your rotas are done correctly. We do 10-day forecasts continuously to see what manpower we're bringing in and trying to keep that variable payroll under control.
Great. Okay, brilliant. Well, look, I think that is about all of the questions. So just a few other things to cover. As I said earlier, so we have the webinar tomorrow morning. So if you want to register for that, the link is in the chat box. But I would recommend that you check out the guidelines online as well, because they are kind of quite comprehensive. We've mentioned the support hub a couple of times, and really what that is, I mean, this is a new website that we actually built in response to COVID, really is what it was. And believe it or not, although we're only 7 months in, it's actually on its second refurb. We've just finished a restructuring of it, and you'll see here like that it's structured so that it's very easy to access from all the different businesses. So all of the different sectors have their own tab. There is one for pubs as well, if you kind of scroll across the carousel. God, I can't think of my words. And then across the top here in this blue line, you can kind of see there's all the industry latest updates, the business supports, there's drop down box there. And I mean, that kind of looks, it'll cover off on HR things. We've actually just updated the latest HR videos to take in all of the latest changes in HR laws, restrictions, all of that type of things. There's sales and marketing toolkits in there and templates. There's the operational performance. The calculator that Michael showed you there was in there. There's financial planning. Then there's government support. You can either access it through here or access the other one. And that actually has a lot of the detailed information on the EWSS scheme, the CRSS scheme. It has lists of all of the government support. So it's kind of like a handy source for all of that, because it can be a bit tricky to work your way around all of the government and revenue websites. And then there's also the Learning Hub, which is an online learning platform that has about 12 or 14 different modules in there. It could be for management, supervisory level. It has a customer service piece in there. It has a COVID-19 charter. So all of that's available all in that one space. So I guess just to kind of finish up, like, we're always looking ahead to what supports that you might be interested in or what you might need. So it'd be great if you could just take a minute now as we wrap up, just if you could just select on the little white box by each of these options on the slide, if you'd be interested in any or some or all of the topics that are listed here. So you could tick none, you could tick one, you could tick them all. And what that does is it just kind of gives us a good sense of how to position the supports that best meet your needs. So look, while you're doing that, I would like to really thank Michael and Emma Jane for all your insights and expertise. I think that all of the information you gave was really kind of really practical and tactical, and hopefully information that will be really useful to businesses. Thanks to all of you for tuning in. I know how busy everybody is. It's a really stressful time. I know everybody's sitting with bated breath now, watching Netflix and everything else to kind of see what's going to happen in the next couple of weeks. So that's why we kind of wanted to do this now. So hopefully, if everything does open in December, that kind of you can obviously make the most of the trading time we have. And I think then that is it from us. I hope you found it useful. And as I said at the start, the recording of this session will go up on the Fulch Ireland website. It'll probably be Monday realistically, but we'll have the slide decks and everything up there as well. So just on behalf of myself and Fulch Ireland, thank you all very much and mind yourself. Take care.